Welcome to TheoTrade. This is Don Kaufman. It's January 29th, 2020, and you are watching the TheoTrade evening video. Here in the after hours, there are a number of key earning reports out, driving a lot of the S&Ps, and you'll see the S&Ps right now are down some 750. The Nasdaq is, well, massively unchanged after quite a volatile session, both overnight and during the live trading session. Of course, we also heard from the Fed today. What did they say? Absolutely nothing. Let's get down to it. So the S&Ps have continued to be, again, rather, if you will, sketchy in terms of trade. When I talk about, like, sketchy trade, again, early in the morning, this morning, bell goes off. You see some sell side activity where the S&Ps drop from basically 3290 all the way down to 3270. I mean, we had a straight drop down, rallied it all back. The Fed comes out, says absolutely nothing. The S&P sell off again. Earnings come out, drove us a little bit further to the downside. Again, quite a bit of sketchy trade. I'll also kind of remind you that in some of the overnight trade, it's not dissimilar. Again, there's lots of news coming out, and a huge amount of this I attribute to almost exclusively hedging activity. And why do I attribute to that? Is all about the volume inside of the S&Ps. All right, the volume in the S&Ps is just, it's really lackluster with the kind of volatility that we're seeing. And if you looked at where the S&Ps effectively closed, which is right at about 3270, okay, you would miss the fact that this, people, is a fairly volatile trading session. That's why I said, the S&Ps are trading just downright sketchy on an intraday basis. The Russell kind of taking the brunt of the hit, down about 0.6%, but largely a mixed bag of goods here in the after hours. That's in large part due to the earnings. Okay, before we get to some of the specific earnings, I want to give you kind of orientation for the week. And I like to do this with the SPX, and I do this from time to time. Listen, the SPX expected moves, right? What kind of move we were expecting here is just north of a $50 move in the entire week. And again, I kind of want to highlight this, right? So this is the week at large. And remember, that's $50 higher or $50 lower. It's actually slightly above a $50 expected move. On Monday, we already tagged, okay, the edge of the expected move. We actually rode on the edge of the expected move, which was 32.43. If you want the edge of that expected move, it's again 32.43. So we rally out of the hole, we rally a little bit more, we fade into it. Okay, the point that I want to make with this for Thursday and Friday's trading session, people, there's still a whole lot of room for improvement here, both to the upside and the downside. So once again, I said this last Wednesday, okay, and last Wednesday, again, you're looking at this and you're thinking, oh, nothing effectively happened. I said it last Wednesday, and the evening video was only a 4-day trading week, and it became, once again, Mr. Toad's wild ride. And that's exactly the same situation that we're in right here, right now. And I also kind of want to reiterate, okay, from time to time and throughout the course of the week, okay, take a look at the SPX option chain. It's the mother of all products. And the reason I want you to look at the SPX options chain, take a look at the January 31st options. And when do those expire? It's Friday. I mean, that's our Friday expiration. We're still sitting, okay, with a $33 and change expected move. So you're like, okay, what does that mean? It means get ready to rumble. I mean, listen, there's still a whole lot of movement priced in here. I just wanted to reiterate that on the week. I also want to kind of remind you, we're not far from like where the week started. Again, the week started right here, right around that 32.95 level. We dropped down, we rallied back up, we're fading a little bit. As I said, there's a lot of earnings coming out. Also, I would say one of the key factors in this marketplace, I know everybody's very tech-centric, right? But let's also remind you that if you look at the monsters of tech, this is the monsters of tech. It's kind of a conglomerate symbol, okay, that we built. And I'll remind you again, it's what? It's Facebook, it's Apple, it's Microsoft, it's Google, it's Amazon, okay? And they're all kind of ratioed together. The monsters of tech actually cracked to an all-time high today. Did the S&Ps crack to an all-time high? No, they're far from it, right? Well, okay, 2% from it. But it's all about the financials. And I want to give you orientation where the financials are in the week as well. So if you zoom into the financials look just like the S&Ps. So the financials dropped out on Monday, Tuesday, gained it back, okay? And here we are effectively on Wednesday, dropping just below, okay? Look to the bottom edge of these financials here. It's right around 29.92. Again, 29.92 is the bottom edge of the expected move inside of the financials. I bring that to your attention, okay, in simple respect to the fact that these two are still anticipating a huge amount of movement. I mean, you're looking at, again, 36 cents of movement between Thursday and Friday inside of the financials. There's no earnings in those financials. The financials are through the earnings, okay? This is a surprise to me. And I'm going to tell you exactly why it's a surprise. Not because the expected move here is 37 cents. The financials were only down 5 cents today. What's the surprise? The surprise is the fact that the bonds, they ripped. And if you're missing this, you're missing, okay, the broader amount of the marketplace. I know everybody's infatuated right now. It's Tesla earnings. I get it. You know, it's Microsoft. I get it. That ain't going to drive order flow. Okay, what's going to drive order flow right here, right now, is this bond market. And the bond market, I mentioned it on the weekend video. I mentioned it on a Monday night video, and I'll reiterate today. It broke to the upside, and it continues to break to the upside. And it's going to change the way that you feel entirely about this marketplace because the yield curve is going to invert. And if you haven't looked at the yield curve lately, well, guess what? You're about to look at the yield curve once again with me. All right. Some people look at what's called the 3-month versus the 10-year. And I'll just kind of highlight those for a second. All right. Now, this is as of, well, the close today. So this is on Wednesday, January 29th, 2020. Look, the 10-year is sitting at 1.6%. The 3-month is sitting at 1.56. Effectively, they're totally flat, right? They're the same. And what you're going to get is if the bonds move up even a hair more, okay? And the bonds, okay, the notes, specifically the notes here because it's the 10-year. If those move up, okay, the actual price of the 10-year goes up. This right here, that's the interest rate associated with it, that's going to drop. And all of a sudden, that thing will be like 1.55. Then everybody's going to start freaking out. There's an inverted yield curve again. Okay, that's the talk. It's the talk of the town. It's what I was talking about over the weekend. Okay, and I said on Monday, you realize on Friday and Monday, 2 days is selling, and we're already talking about an inverted yield curve. You have to recognize, okay, structurally, how messed up is this marketplace that you could have 2 days of sell-side activity occur in a market. 2 days of selling in the S&Ps, and all of a sudden the yield curve flips over and everybody's like, that's it, we're going back to recession, baby. Okay, that's how unusual this happens to be. And you have to put that in some degree of perspective. Now, okay, I can't tell you what the bonds are going to do tomorrow. Okay, I can't. Maybe the bonds will actually back off a little bit here. But right now, if they continue to go higher, it throws the entire S&P into chaos. And that's, you know, what we're kind of going with right now. All right. And if those bonds also, if they continue a little higher, it's going to snap the back of these financials, and those financials are going to drop like a rock. It's one of the reasons the financials still have, again, I'll reiterate this, 37 cents of expected move in them. Okay. We talked about the SPX. We talked about the Fed or lack thereof. What's the Fed going to do? They're going to do nothing right now. What do they update us on? Absolutely nothing. So why do we have to talk about the Fed? We don't. Okay, it's fine. Repo, juice the markets over there, do whatever you want. It ain't going to matter if the yield curve inverts, because if the yield curve inverts, it's saying that the Fed still has to turn around and lower rates. And they're going to have to lower rates, okay, towards the latter half here of 2020. Of course, the Fed doesn't say that yet. The Fed says, everything's good. We're all good. It hurts to give $90 billion a day to the repo market. Nevertheless, they're all good. Moving onward and upward. If you are interested in some of the earnings, well, let's get down to it. Around earnings, I like to place earnings butterflies. Earnings butterflies are around the edge of the expected move. First, foremost, start with Facebook. Okay, you can actually see inside of Facebook here. First of all, that's the last price. That's the last price on the trading day, right? You know, after the market closes, though, the bid and offer, that's live. That's right here, right now. There's a conference call that's actually probably going on in the moments. Okay, listen, Facebook has dropped now. Well, it was at 223. Its expected move is $11. So it takes it down to what? Oh, somewhere near what, the 223 minus like $11, 211-ish. So I actually centered a butterfly right on the 212.50, and we're home. Okay, we're in range of the butterfly. We're not doing spectacular, but we're absolutely in range of the butterfly. So if Facebook rallies just a hair in tomorrow's trading session, this butterfly is actually going to knock it out of the park, right? And it's good to have a butterfly on a Thursday or Friday, because that's really when they're going to mature. When's the butterfly going to mature? Thursday afternoon, Friday. When am I going to mature? Never. All right, continuing on from the Facebook butterfly. We got another one in Microsoft. If you take a look at Microsoft in the after hours is up about $4.50 right now. Now, okay, take a look. Its expected move, okay, was about 550. This butterfly, it's also in range. So I actually placed four butterflies. Okay, you're going to see, how many of these in range, how many are not. Okay, so here we have another butterfly. Now my central strike is sitting right at 175. Why is the central strike right at 175? That's kind of where I anticipated us to hit. And you know what? Swing and a little bit of a miss, but for the most part, this Microsoft butterfly, it is close, people. It's really close. Okay, and again, it's in range, so it's a profitable butterfly. But the conference call hasn't happened. If Microsoft actually just juices up a little bit higher to like that 175 region, okay, we'll be home. In fact, if you look at Microsoft in the kind of the after hours here, it rallied back up. Its conference call, though, has not occurred yet. Okay, moving forward. So we talked a little bit about Facebook. We talked a little bit about Microsoft. All right, let's bring up Tesla. Tesla, okay, ridiculousness. Now, trying to hit a butterfly in Tesla, okay, is like trying to hit a nail, okay, right on the head of a nail with another nail at 500 yards away. It's an impossibility because Tesla is it is a monstrosity of an animal. Anyway, inside of Tesla, okay, I actually put on a bearish butterfly here, way out of the money. Listen, this thing had almost a $62 expected move. It's supposed to move $60. What did it move? Okay, right now, a lot more than that. As I said, it's crazy. Okay, they're apparently doing rather well. So I suggest to you, Tesla, okay, it is going to move $60, but it's going to move $60 higher. But I want you to think about this, when it comes to butterflies, right? And I'll kind of script this for you. I'm out there and I'm taking shots with butterflies, and maybe my butterfly costs me in the neighborhood of 25 cents. And I do another butterfly 25 cents. I do another butterfly for 25 cents. I do another butterfly for 25 cents. Now, not all butterflies cost 25 cents, but if my allocations are equivalent, like maybe one butterfly costs 50 cents, the other one costs 25 cents, but if I make the allocations themselves, okay, consistent through contract size, okay, then you really only have to hit like 1 in 4 to make these things worthwhile. So if you looked at my butterfly so far, we're doing pretty good in Microsoft, and we're going to do well in PayPal. So let's say this one's Microsoft, okay? Then we have, like a PayPal butterfly, okay? Then we have a Facebook butterfly and a Tesla butterfly. And we'll take a look at the PayPal one here momentarily. So we hit in Microsoft, okay? We hit in Facebook. PayPal's not doing half bad. I mean, it might hit. Tesla, we strike out. Again, we only had to hit 1 out of the 4 to make this worthwhile in terms of profit and loss. That's why I actually suggest that, if you're going to do earnings trades, these earnings flies work out quite well. So again, I'm less inclined to discuss like, what were the earnings in Tesla? Does it really matter? Okay, what were the numbers? I'll give you a perfect one, like Boeing. Okay, Boeing missed huge this morning. They missed huge. Fell flat on their face in terms of earnings. It was horrible. Okay, they're going to take a full year loss. Their earnings couldn't have been worse, and the stock rallied. So what does it matter looking at the numbers? Hit the fly. Who cares what the symbol even is? Okay, last but not least on that list, as I was saying, was PayPal. Okay, so let's go ahead and bring up the PayPal. So PayPal right now is down in the 112. A couple of these things missed. Okay, PayPal, look at that. Butterfly, we are on it. Okay, we are right in there. So my central strike over here is about 111. This thing's trading 112, 113. It's edgy, but none of these are perfect until, of course, the morning. We'll see how they settle out after some of the calls. But there you have it, people. We have four butterflies that we just showed you surrounding earnings. 3 out of the 4 are in range. We'll see how these things actually turn out tomorrow. So the S&Ps are down 7. Watch trade in the next 2 days. We still anticipate quite a bit of volatility. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.